We use money to measure the value of everything: goods, services, even time. But have you ever wondered, how much are the money themselves actually worth? We tend to think that $10 is always $10, that the number printed on the bill is its value. But in reality, the value of money is constantly changing, even if the paper looks exactly the same. In this video, you'll discover why money is not just paper or numbers on a screen, and what truly gives it power: trust, time, and the choices made in the economy. Many people confuse money with wealth. But money isn't wealth itself. It's the measure we use to describe it. Just like centimeters aren't the fabric they measure, and a thermometer isn't the heat it records, money too isn't value. It's only a tool for measuring value. Wealth isn't the amount of money you have. It's the amount of things you can actually buy with it. Food, energy, technology, innovation. These are the real sources of value. Money is simply the language we use to exchange those things. When we say that bread costs $2, we're really comparing the value of bread to the value of money. And if tomorrow the dollar loses value, that same loaf of bread will cost more, even though it hasn't changed at all. And here's the key: money has value only because we trust it. No government, no bank can force people to use money if they don't believe it's worth something. The dollar, the euro, the hryvnia, the yen, they all rely on a collective agreement, a simple but powerful belief. I trust that you'll accept this money too. When that trust disappears, so does the value. Think of Weimar Germany in the 1920s, or Zimbabwe in the 2000s. People carried bags of money just to buy bread. Not because there weren't enough banknotes. There were too many. The real problem was that no one believed in their worth anymore. Even when we trust money, it has another property. Its value changes over time. A dollar today is worth more than a dollar tomorrow, because today you can invest it, earn interest, or buy something that might cost more tomorrow. This is called the time value of money, one of the most fundamental ideas in finance. That's why investors demand interest, and lenders expect compensation for giving up their money for a period of time. In other words, money has a kind of price of waiting. In the world of finance, money has its own price, and that price is the interest rate. When you take a loan, you're basically borrowing money from your future self, and for that, you pay interest. That's the cost of having access to money today instead of later. When you put your money in a savings account, you earn interest because you're letting someone else use your money. This price of money depends on how much money exists in the economy and how strongly people want to borrow or invest it. When interest rates are high, money becomes expensive, borrowing slows down, and investments shrink. When rates are low, money is cheap, and the economy speeds up. It's the main tool central banks use to guide the flow of money across the world. Institutions like the US Federal Reserve or the European Central Bank literally decide the price of money. Even without loans or banks, money has another enemy: inflation. When prices rise, money buys less, and that means its real value is falling. $10 today is not the same as $10 10 years ago. If everything around you keeps getting more expensive, then even without spending a cent, your money slowly disappears. Inflation is like silence. It quietly dissolves your savings. You don't hear it, you don't see it, but it's always there. That's why the real value of money isn't what's printed on the bill. It's what you can actually get for it. So, how much are money really worth? Money is worth as much as we trust it. Its value changes over time. It has a price in the form of interest rates, and it loses its power when trust disappears. We like to think of money as something stable, but in reality it lives its own life, shaped by time, policy, and our collective belief. Money isn't just paper or numbers. It's a mirror of our faith in the future.